Marcel, thanks so much for joining us today. Good to have you on the show. Let's kick off with a view on the banking sector and Standard Chartered's rights issue, looking to raise 3.2 billion shillings with that rights issue share price set at 145 shillings. What are your thoughts on that relative to the actual share price?
Well, the overall discount here is probably in line with what we've seen in the markets over the past 18 months or so, or even beyond that. The reality of this rights issue is that it brings back capital as one of the key parts of investing in banks today in Kenya to center stage. A number of banks, including ourselves or NIC, are going through this path. In an environment certainly where you're seeing interest rates coming down, and you're assuming that lending will be back, and we will see some degree of return of business confidence. This is regardless of what the outcome of the election is, and this is focusing on the longer term growth. It is important to be sitting on a banking system that is strongly capitalized.
Marcel, let's shift focus to the bond market. A lot to talk about there, but one was, I suppose, a scathing article in this week's East African about smart games that banks are playing and games that banks have played to hide bond losses, I suppose, all in light of what took place in the economy last year with interest rates. Firstly, what type of tools have banks been said to be using, and what has the response been to these allegations?
Well, the issue around bond portfolios is very much linked to where interest rates were last year and what they have evolved to be towards the end of the year and where they are today. It is a very clear established fact that fluctuations in interest rates would hit some of your available for sale book if you have any. The allegations in the papers are perhaps pointing to trading practices rather than banks' willingness to hide any losses. But the reality is also that throughout the sector, perhaps different degrees and different approaches have been allowed to apply.
I mean, is this going to have any ramifications going forward on any of the numbers that we have seen in terms of profitability?
Well, on the basis that perhaps a quarter or so of your assets in Kenya, in the Kenyan banking system, are into sovereign bond portfolios. It is not impossible. I wouldn't exclude certainly that you could see a lower interest rate environment having some impact on profitability.
Talking about interest rates, the topic of interest rates is one that everyone's talking about right now, of course, with inflation slowing to 5.32%. Speaking to Equity Bank's CEO James Mwangi yesterday, saying that the Reserve Bank or the central bank governor is being a little bit hasty, should wait for market dynamics to take force, and banks will ultimately start decreasing that interest rate spread. Of course, there's been a lot of criticism of banks who haven't done it quickly enough. What are your thoughts on those kind of comments that we've seen around the high cost of borrowing still in Kenya?
Well, let's see what is past is past. What really matters at this stage is that banks are able to take advantage, or are strong enough to take advantage of the upcoming lending growth. If you accept that at least in the second half of next year, you should see a strong return of lending growth and perhaps a strong return of growth in the economy. Going back to interest rates and bonds, I have to say that, for instance, the FTSE index launched today is good news for both banks and banks investors, because it provides us all perhaps with an independent pricing reference which I think might have been missing in the past 18 months.
Marcel, if you're talking about equities, where are you seeing foreigners buying equities at this point in time? Where's the strongest demand coming through for local equities?
Well, you have a number of different profiles out there. Our view as a house is still the same. We think this is the right time to get into equities, potentially, certainly in terms of asset allocation, but also in terms of potential returns going forward. Equities have been overlooked as a potential asset class over the past probably 9 months or so, but this has come to an end.
Marcel, thank you so much for joining us today. Marcel Mballa-Ekobena, Head of Equity Research at CFC Stanbic Bank, joining us from our Nairobi studios.